Hello friends, welcome back to Wealth Growth Club. Today, let's break down the numbers and journey of IRCTC, the company that sets the standard for railway ticketing, catering and tourism in India. Let's start with sales. Back in 2015, IRCTC made about 1059 crores. This year, they posted 4717 crores in sales. That's more than 4 times bigger. Over 10 years, that's an average annual growth rate of 16%. In the last 3 years, sales grew an amazing 36% per year. That's what I call strong, stable growth. Even this year, revenue went up by 10%. Steady progress, not a wild sprint or sharp slowdown. Next, let's look at expenses. What IRCTC spends to run the business. Expenses grew from 907 crores to 3145 crores. This keeps up with the business growth. But here are some key details. Material cost used to be around 23% of expenses. Now it is around 6% as digital business has grown. Employee cost is fairly steady at 7 to 13%, showing the team is lean for the size of the business. Other costs, these are tight to under 13% most years. So the company has kept cost in check even as it's grown. What about operating profit? The money left after all those expenses. 10 years back, operating profit was 152 crores. This year, it's an impressive 1572 crores. Operating profit margin consistently high, average 30 to 47% over 5 years, and 33% this year. So out of every 100 rupees earned, IRCTC keeps 33 rupees after expenses, a clear sign of operational strength. Let's talk about other income, interest, and depreciation. Other income helped this year 284 crores from investments and side operations. Interest expense is less thanks to a nearly debt-free balance sheet. Depreciation, which is the cost of assets wearing down, is 51 crores, very manageable for their size. Now, the real deal, net profit. Back in 2015, net profit was 131 crores. This year, profit soared to 1,337 crores. That is a 10x increase, about 26% average profit growth every year for a decade. Last year's net profit grew by 10%, and net profit margin is a whopping 28%. And EPS jumped from about 13 rupees up to 16.7 rupees this year. This means the company is not just growing, profits are strong and steady. Dividends are worth smiling about. Dividend payouts have ranged from 20% up to 61% of profits, and the current yield is 1.12%. Not huge, but consistent cash return to shareholders. And return on equity is 37% this year, often around 30%. If you compare IRCTC with their peers, its operating and net margins are much higher. Most others don't go beyond 20%. IRCTC easily clocks above 30% operating and nearly 28% net. Growth rates in both sales and profits are also ahead of almost all similar public sector outfits. Plus, they have almost no debt. So, overall, IRCTC's journey is all about consistent, predictable, and high quality growth year after year. Margins are juicy, cash flows are strong, and there is minimal risk from debts. Most revenue comes from a dominant or monopoly position in Indian Railways, digital and food business, which means less threat from competitors. Even when sales in tourism or catering fluctuate, like during COVID, the core ticketing and services business makes up for it. For anyone wanting a company with steady progress, strong profits, reliable dividends, and a special spot in India's growth story, IRCTC really stands out. Hope this deep dive helps. If you want more stories like this, subscribe and tell me which company to break down next. Thanks for watching Wealth Growth Club.